5 companies that I love. I repeat, 5 companies I love. There's a difference between a company and a stock price. So if you're new to watching our channel, I want you to remember that I think it's very possible and very likely that people overpay for companies they love. You know, people always hear the Peter Lynch adage of buy what you know and buy what you love. But what they forget is he's not saying at any price. He's saying at the right price. The example I always give is when I used to teach the high school kids about investing, iPhone. I'm like, who here loves the iPhone? Everybody raised their hand. I'm like, okay, pay $10 million for it. Well, no, why not? Invariably, everybody says it's not worth $10 million. Exactly. So I'm gonna go over 5 companies that I love, some of the qualitative aspects that I like about them, and a few of the quantitative things. So the first one, Ferrari, ticker symbol RACE, R-A-C-E. And the funny part is, in our community chat, I wanna pull up a member of our community. NVigil89 wrote on September 6th, can you stop making race YouTube videos? Every time I watch them, I'm like, F it, I'm buying, LOL. You know what I love about that comment? 2 things. 1, that he's being funny. And I love the funny engagement that we get in the community. But 2, he's sitting there saying, I keep thinking, F it, I want to buy, but he's still not buying because he's still being disciplined and saying, I have to wait for the right price. So Ferrari is up year to date about 40%. Now, the reason I love Ferrari as a company is ultra exclusive. They only make 13,000 cars a year, which is almost double what they were making 4 or 5 years ago. And it's high priced and people on wait lists. When I went to a Ferrari dealership in Florida one time and I said to them, hey, how does somebody get a Ferrari? They said, new one? I said, yeah. He goes, you got to buy a used one first. Buy a used one first, get in our system, and then come in and we'll sell you a car. I love it. To me, that's the exclusivity I want. Their fastest growing markets are Africa and Asia. Why? More and more wealth being created there. I've been saying in a lot of videos, Africa's the new frontier. But that's what I love about Ferrari. They could go sell 100,000 cars tomorrow. They choose not to. They'd rather have the exclusivity, and that's what I love about them. So let's look at the 8 pillars. So a couple of problems with the 8 pillars here. And remember, if you're in our community, you can customize your 8 pillars up to 12 different pillars. But look at this. High PE, very high price of free cash flow. Something I don't like about Ferrari is their earnings are higher than their free cash flow, which is why the ratios are the opposite. I don't like that. But the other thing is they have a lot of debt. Now, does the debt bother me? No, because they're a highly exclusive company. So I'm okay with that. Let's go look at Stock Analyzer tool, and let's see the last time I pulled up Ferrari. I did Ferrari, just 5 days ago at 10:37 a.m. I did a 20-year analysis because I look at Ferrari saying, if I'm able to buy it at the right price and own it, I want to own it for a long time. And our Stock Analyzer tool allows us to go 20 years. But I made these reasonable assumptions on revenue growth, profit margin, free cash flow. And by all means, you can check out that video. But at the end of the day, the price I got was a lot lower than it is today. I basically put on my watch list at $200 a share. But the thing I want to understand about Ferrari is, why is their free cash flow so much lower than their earnings? I don't like that. I don't like that at all. Company number 2, Google. Google, the top 2 search engines in the world are Google and this very one you're on right now, YouTube. They are an incredible business. Absolutely incredible. I love this company and I can't wait to own it. The question is it the right price? Well, I will tell you, they have a very, very, very big moat. We literally say Google it. We don't say Bing it. We don't say Yahoo it. We say Google it. They literally own the market for search. And I love that. And the best part is, you guys understand this. When you see ads on Google, sometimes the person in the number 1 spot is paying less than the person in number 2 spot or number 3 spot. Why? They reward advertisers for having more and more relevant websites to the thing they're advertising. The more relevant it is, the higher the quality score, the less the advertiser pays. Imagine that. They're a company that could literally, you could be paying less to be in number 1 position as long as your advertisement is highly relevant. They want to make the user experience absolutely incredible. And they sacrifice short-term profits for that. What could be better? That is awesome for me. Google, all-time high of 152. It's currently at 137. Let's take a look at their 8 pillars. Everything's a check except for valuation. But guys, maybe you should be willing to pay 34 or 33 times earnings and free cash flow. They're a moat, and I don't think they've even tapped the surface on online advertising. I don't even know where they are in terms of the value, in terms of what that future potential is. Let's go to our Stock Analyzer tool and see the last time I did Google, what it looked like. I did that on August 29th. Now, what I'm going to do here is I'm going to change the desired return to 10% across the board, basically saying, hey, it's about the market return. One could justify 9%, whatever it is, but I hit the analyze button. And guys, on the high end of my assumptions, I'm there. Middle side, 108. Low side, 75. I actually have it on my watch list at 105. So I just got to be patient. I just have to be patient. Company number 3, Apple. Guys, Apple is immersed in our life. And a lot of people love Apple even more now because Warren Buffett owns Apple. But remember, if you look at the last quarter and the 13F filing of Warren Buffett and Berkshire Hathaway, they did not buy more Apple. Why? Look at Apple. The lowest price it was 173. I believe their buy price is under 140. That's what I'm deducing. There's no evidence whatsoever besides me looking at when they bought and when they didn't buy. And I believe it's 140, maybe a little bit higher. I don't know. But I look at Apple, same as Google. High moat, immersed in their life. Warren Buffett said he loved Apple when he would try to take his grandkids and their friends to Dairy Queen and he couldn't get them off their phone. And Warren Buffett said something amazing. If I told you today, you can either give up your phone for a year or your car for a year. He goes, I'm very confident everybody would pick their phone to keep and get rid of the car. And I think he's 100% right. You can still Uber. You can still do all those things with your phone, but you can't do the phone things with your car. And that to me was a very amazing statement. But again, pay any price for it? I don't know about that. And look at their 8 pillars, 2 X's, valuation only. So far, guys, we've had 3 companies, Ferrari, Google, and Apple. And it's been an X on valuation. Let me go pull up what my valuation on Apple was based on our stock analyzer tool. I did it just a few days ago. And I came up with a value of low side 90 to 100, high side 175 to 180, middle side 120 to 136. And I have it on my watch list at 140 because I want to sell puts on Apple. Now, I don't put 140 because I think that's where Warren Buffett's buying. I actually don't want to buy it at 140. I want to buy it lower. But I let the software notify me so I can start selling puts, which is something you can learn about in our community by making money waiting for a company to hit the price I want it to hit. And that's what's important to me. Company number 4, Microsoft. I love Microsoft. I love Bill Gates. I have an unhealthy obsession with Bill Gates. I was at Laver Cup tennis event in London back in September, and he was 15 rows ahead of me to the right. And I basically, my fiance even jokes, and she goes, that Paul would not stop looking over there. I just kept looking over there, even though the match was going on over here. I just kept looking at Bill Gates. So whatever, call me a creep, whatever you want to do, but I love Bill Gates. Let's see the 8 pillars on Microsoft. No surprise here, guys. I'm just waiting for a lower price. 47 and 43 times earnings and free cash flow. That's 4 companies in a row where those are the 2 X's. All right, let's go to our stock analyzer tool and see where I did Microsoft, where I valued it last. July 25th. It's been a while. Yeah. So this includes my margin of safety. And I have a low price of 150 to 170, a high price of 230 to 250, and middle price of 180 to 200. I'm going to be a little bit more patient. And I'm okay with 210 and starting to sell puts at that level. Microsoft's down about 4% to about $4 today. But here's the interesting thing about Microsoft. Its low back in November was 213. Its high, all-time high, was just 2 months ago, and it was 366. Guys, these fluctuations happen. These fluctuations absolutely do happen. Back in December of 2021, it hit 344 and then went down to 213 just 10 months later. That's incredible. So just be patient. That's what I try to teach on this channel, is the ability to be patient. If you're patient, you'll make a lot more money, but increase the scope of the companies you want. Final company, Visa. Love Visa. Oh, somebody's messaging me in the community. Let me check it out. See what they wrote. Oh, somebody commenting on Ulta Beauty, which is a video we did, which I loved. All right, so let's pull up Visa. Ticker symbol V. Guys, this company just spits out cash. 52% profit margin to the bottom line after taxes, 80% gross margin. They have free cash flow that's higher than their net income, which I love. I mean, this is an unbelievable business. They pay out $3.6 billion in dividends, which is way below their 5-year average free cash flow. Incredible company. Let's look at their 8 pillars. Again, Is anybody surprised? Boom, boom. As you can see, the companies I love the most are the ones with all green check marks and 2 X's for valuation because I can be patient. Doesn't mean that if it has these 6 check marks, I love it, but it just tends to be something, if you watch our videos, I'll say, oh, look, it's our favorite situation because I can be patient. Look at my watch list. My watch list, I have how many companies on my watch list right now? 75 companies on my watch list, and I'll just be patient. I'll just wait until it comes to me. Because with 75 companies on my watch list, when prices come down, I can be even pickier. And maybe they're all, let's say hypothetically, they all got below their number. Great, I'll just pick the one that's furthest from their number and put more money into that one. That's the brilliant part about investing. But the key is you have to be patient, and that's part of the process we're trying to teach here, and that's the process we have in our community. That's why I love what the guy said about Ferrari. Because I know he's not buying it because he sits there and goes, listen, I just gotta be patient for the right price. So if you're interested in learning about the community, just click this link above for this video, watch this short video about the community, how it can help you become a more patient and successful investor. Thank you very much.